I think you're absolutely dead on it. To me, it's about asset allocation. That money has nowhere to go for return but in equities. And it's been very, very long in coming. People looked for it last year. We're starting to see money, net inflows into equity funds. My guess is it picks up steam because people can't pick up their 401ks or their monthly stock bond statements. See, I'm not earning anything. I'm negative. As BK said, I need return.
And Killer, I think ultimately at the bottom line of Larry Fink's point is just that. It's the exact point that Stephen Weiss is making. You're not getting any money or return in any of the other asset classes, so you better be in equities because it's the only place that you're going to see it.
That's exactly the point, Killer. That's not going to take its finger off the trigger, and there's lots of money on the sidelines. I don't even think you need the rotation, although I expect it. I think money comes in off the sidelines.
The number of traders who want to get in, Matthew, on the conversation, Weiss is one of them.
Yeah, frankly, I've never seen a stock underperform where consensus estimates are low. Your estimates are higher than consensus. So if your estimates are right, you're going to be wrong on the stock. How do you explain that disconnect?
How about you guys? Where do you come down on the?
You know, I sold my Morgan Stanley last week. I'm not in the banks at this point. I'm waiting for just an opportunity to get in because they have run, despite what I said about to Cortez before about not where they've come from, where they're going to. I just want to wait a little bit. Judge, you were beating me like a dog last year when I owned J.P. Morgan and kept trading down. So I'm a little gun shy. I don't want to make the wrong move here and have you come back at me.
How about you, Stutland? How do you see the banks here?
My trade is then about 75%, depending upon the account, net long equities. And the reason is I'm not looking to time it. What I've done, though, is I've taken some bait off, which means that how it moves, excuse me, relative to the market. So calmer stocks, easier moving stocks, more value stocks than high test stocks because there's a flood of liquidity coming, number one. And I'm not seeing cracks in the bond market yet, but I am seeing credit start to get fully valued. And when that gets fully valued, the assets go into equities.
Well, one thing we're doing is using a little caution. I think Weiss makes a great point about beta and understanding your risk relative to the S&P 500.
Right, Weiss?
Hey, Cortez, just one thing about Larry Fink. Keep in mind, he's also one of the largest managers of fixed income in the world. So he's relatively agnostic in terms of where money goes, number one. Number two, I try not to focus where the stock has come from, but where the stock is going to, because that's how I'm going to make money, not crying over spilt milk or not crying over things that I miss. So I agree when stocks really, ramp up significantly, you got to take some off the table, which I did, which is why I went into lower beta, but I still think the bull case is well intact.
Right now.
Which is a great thing for a stock picker. I own Nordstrom. One stock I wouldn't own here on the low end is JCPenney because the stock's already reflecting success in the turnaround, and you have Ron Johnson who is selling stock. So that's one, if I owned, I would definitely sell. You can't give them that much of it. It's just too tough in that space. Nordstrom, however, that's a unique offering. Macy's, which is also luxury with their Bloomingdale's, that's another great name.
Cerner Corporation topping 13%, Weiss.
We talked a little bit about it before. This is the healthcare technology space, which helps basically service providers in healthcare digitize their records, better care, and the government has like a $30 billion subsidy to help these providers do it. Great space, this and also.
You're telling me that you're gaining your revenue through menu price increases. There's only so far that goes. This is more of a.
Come on, Herb. That's called pricing power.
Yeah,
Herb.
that's a good thing if you can raise your prices and your customers.
You're dumping all over a company's ability to raise its prices.
Herb, let me ask you this: would you feel better if they weren't able to raise prices? If they had to take price cuts?
No.
Would you become a bull then?
It's not a question of being bull or bear because I really have no opinion on this company. That was not really a beat.
So you hate joy. You hate pleasure.
Don't we have another company to talk about here?
Oh, I can't wait to get to that one, too. Open Table. What are you going to tell me about that one?
Which is the number one
Herb?
most chatted company right now. Two analysts downgraded it.
I am so with Herb on this. I think the stock should be sold. I don't think the restaurants care who they use. You may care. I may use it.
I'm not saying it should be owned or sold. I'm just simply presenting the other side of Herb's argument.
Because you love it so much.
Herb, what can I tell you? You make it easy. I'll see it, too. Let's, in fact, on that note, let's just get right to Herb. Let's bring in our senior stocks commentator, Herb Greenberg, and also Stephen Weiss of Short Hills Capital is on the fast line. Herb, I see you're already standing up, so you look like you're going to be fired up here. And let's just get a comment first from Steve Weiss, Herb, because Stephen Weiss bought Diamond this morning. Stephen, what were you thinking?
Well, hey, Judge, I actually bought it in the pre-market, and I bought some when it opened for trading. And here's what I'm thinking. Basically, I don't have a nut allergy, so that's the first thing, so I'm okay with Diamond.
Maybe you're just nuts. How about that one?
Well, the second thing is sometimes you have to be a garbage man, and when people throw things out, I look to see if there's still some value there. Here's how ridiculous it is. You had an analyst today that lowered his price target this morning from 75 to 25 and suspended earnings guidance because he didn't know enough. So I guess doing your own work is apparently too high a hurdle. What I see here is I see $1 billion in revenue, and I see the nut business, which is not going away, at about $400 million of that. So right now, if I take the nut business completely away, I'm buying the stock for less than 1 time's earnings. I've got the former CEO of Del Monte Foods, the CEO now. They've identified the problem. The issues I see going forward is I don't know when the restated financials are going to come out. That's an overhang. And I don't know exactly what the true impact of it will be other than what I identified.
Steve, but you're willing to take a risk. Herb, Weiss says he's dumpster diving and he thinks he found a gem in the garbage can.
I used to think Steve was a sensible guy, especially when he agreed with me. In this case, you have several things going on. You certainly have the walnut business, which you have to think may go away because these walnut growers have been, I may not be too happy with the company that they didn't get some payments. Very interesting. All the elements, how anyone could take a stand here like that would have to be the most speculative thing out there.
It's Josh. I'm curious. Have you ever seen one of these?
Hold on. Weiss.
The language they put into this statement, into their release, which is that there may be other issues and there may be material accounting issues, is as boilerplate as you coming out and saying, I don't like it. So I would say you have to look past that.
This is a cockroach theory story.
Value here, and I'm happy I own it.
Well, you know what?
Make money, I'll make more money.
Thank God that's what the markets are all about. They're bulls and bears.
So there's not going to be any meltdown at jobs, Steve Weiss. And I want to ask you, our economy is performing better than Europe's.
Yes.
Can we decouple from our economy and their economy? And can we decouple between our stock market and their stock market?
I actually think we can, but I think you have to be careful in terms of where you go in stock selection. I am so bullish on the U.S. dollar that it's the most compelling investment I could find right now.
Is it just a question? A strong dollar had been associated with the risk-off trade and some deflation and bad for stocks. Could the strong dollar go back to its historic norm and be good for stocks?
I think it can. The only issue on the other side is you have to take a look at the multinational companies, and they'll have to adjust their earnings for foreign currency. But there are plenty of good domestic consumption stocks to own where I think you make some pretty good money going forward. I'm turning more positive on the market overall because of that, because I think we're the default market, number one, and number two, we've earned the right to be the default market right now. And if the political picture clears up, and if I think we could see our way to a Romney, I think it's off the races.
Right. Now, here's cool. Banks are up 14%, but the emerging markets, which I think validates the new growth cycle, right? That's kind of the tip of the iceberg. They're up 16%. What does that mean? The emerging markets up 16% year to date.
First of all, it means they had a really bad 2011. so in rallies...
That's not the right answer.
I'm sorry, that's what I have. So in rallies, the market goes to the junk first. Not that it's junk, but to the most beaten up
the highest
first.
risk. The highest risk.
But here's the real key. Today was a good number, the jobs number. I actually got bullish sooner, got very bullish yesterday. The reason is that you're having fixed income assets reach full pricing. So there's not a lot of value there. So you're starting to see money, number one, come back into equity funds, and the asset allocators, without a doubt, in my view, are going to go after equities more and more.
So common sense gauge, stay with that. It's a great point. People are going to read the big headlines tomorrow about the improving jobs story, and along with that, there'll be ISMs and there'll be car sales, all of which looks like 3% growth. So they're going to say to their brokers and their planners on Monday, I got to go into stocks. The economy is growing. All this talk about the new recession, the double dip, Obama is wrecking America. It's not right.
Here's also what's going to happen. That's sort of it, but really what's going to be, it's going to be when you get the next LTRO from Europe. You've got this massive...
What's an LTRO?
It's basically...
That's the ECB's emergency loan.
Exactly.
And they're going to do another
market.
trillion.
They're going to do 500 billion euros to a trillion. Trillion would be great. My concern is if it's 500, it may be a little disappointing. But you have massive liquidity from every developed nation and even some undeveloped nations, some developing economies. That's just flooding into the market. You can't really go into fixed income at this point because you're not getting paid.
Good, stay out of bonds.
So buy equities.
What's your big...